All right, friends, we are live. Let's see here. Let me adjust this a little bit. So, I'm going to talk about the concept. We are live. And I'm going to talk about the concept of asymmetric risk. Got to rearrange everything here. So, if you're just joining this channel for the first time, then you probably got here because you saw an opportunity to make money or an opportunity to do something extraordinary during this lockdown. And I'm hoping that I will show you that, but more importantly, I wanted to talk first about this generalized concept of asymmetrical risk. And I have a newsletter, a kind of a research service that is really based around this entire concept. And an asymmetric risk is it's a means of producing a return that far outpasses or surpasses the actual risk that you take. So I know that in common trading, we're often looking for like a 1-to-1, 2-to-1, maybe even a 3-to-1 risk. What I'm talking about here is 5-to-1, 10-to-1, 100-to-1 type of return that you'd be looking for the commensurate risk. And it's a concept that most people, because they're so entrenched in the current way of trading, that they don't even look at it, or they may feel like it's not possible. So instead of pursuing these type of risk reward type of profiles, they stick with what they think is easier. And they'll, maybe through the law of large numbers, if they have just a little bit of edge, then they can eke out a profit, but it very rarely happens. The reality is that the people who are making a lot of money trading are the people who are taking these asymmetric risks. They don't take as many trades, or they find these trades, these opportunities, because they're looking for them, and because you're not. So looking for an asymmetric risk is kind of like outside the norm for most people. But again, what is it? It is like, I guess an analogy would be in the real world using a lever, say a stick, just a regular stick and maybe a small rock, and using that as the fulcrum to move a large boulder. There are lots of these types of risks, these types of opportunities, I shouldn't say just risks, these type of opportunities that exist in everyday trading. But some of the best ones exist in certain sectors that tend to go through these sort of boom and bust cycles. One that I can think of, probably the most profound, is the gold miners. And maybe another risk that a lot of people believe that is an asymmetric risk today would be something like Bitcoin. People that believe that Bitcoin's going to go to 100,000, if you truly believe it's going to go to $100,000, and it's sitting at around $8,700 today, that would be an asymmetric risk. It's greater than a 1 to 10 possibility. So if you, through whatever analysis that you use or any belief that you have, think that it's going to go to 100,000, then it's like a 1 to 12 bet. Why wouldn't you make that bet? Is it the time frame that is worrying you? That time frame in an asymmetric bet is the enemy, right? Most people are looking for returns right away, and then that is the trap. To think that you're going to be able to find consistently opportunities that are going to produce you profit, at least enough profit over the risk that you're taking that gives you enough leeway to keep you on the good side of profit, is very, very hard to come by, and it's hard to do consistently. However, if you search out an asymmetric risk, they're not that hard to find. It's just that they don't exist as often as you may like, and they may take longer than you think they should. And it's one of the reasons why a trend trader really, on average, is far more successful than the day trader or even the swing trader. And that's because they are specifically looking for asymmetric risks, and they know that they're going to take a long time to develop. So by finding things that are maybe extremely undervalued or in a situation that is can produce a huge amount of profit if you're willing to wait it out. However, if it fails, it won't be a great loss. So as an example, if you find say a gold miner, say a junior miner, right? It was formerly an exploratory company, and then it maybe found a particular stretch of land that is producing or through their drilling, a good quantity of gold per ton, and they project through that exploratory that they're going to actually produce a lot of, potentially, maybe millions of ounces over the life of that exploration. That might be one of those types of asymmetric bets. Now, you don't know that they're going to be doing that, and there's a lot of risk involved, a lot of cost, but the cost of investing in that gold miner, that exploratory company, is going to be really small. But the payoff can be huge. You could literally 10, 100 times your money. It really comes down to a few things. How do you find those particular types of companies? How do you find the ones that are the most likely to succeed like that? And the answer to that is that through research, a lot of hard, painstaking research. And there are a few fundamental things that you're always looking for in a company like that. And primarily, it's not necessarily the project that they're on. What you're really looking for are the people who are actually involved in the project, whether or not they have they're serial succeeders. So you look for that. Then you also look for the quality of the project. Now, there's one asymmetric bet that we're making right now in a company, and they've gotten beyond the exploratory phase. They've already proven that they've found mines and land areas or tracts of land that produce fair amounts of gold. They've been mining that area, and they've shown consistency. The people who are running it are of the highest quality. The geologists are top rate, almost legends in the industry. And they have lots of gold that they've pulled out of the ground, and they have it on reserve. And so you look at a company like that, and they're small. So first of all, let me just tell you that there's the exploratory, there are junior miners, there's lots of exploratory companies, and lots of explorations that are going around. There's somewhat fewer junior miners that are actually now mining those exploratory areas and producing in all different quantities and quality of the result. Then there are mid-tier miners that have grown up from being junior miners or have acquired junior miners. And then there are the majors who have acquired a lot of mid-tier and small miners. So you have all these different levels of company. But we found a small junior miner that has absolutely the best quality ore that they're pulling out of the ground, as well as proof that they've been able to pull it out consistently. And so we know that the mid-tier and the major miners are always looking for these types of companies, whether or not they're a good value, to add to their portfolio of companies. Now, in the major miners, they consist of different types as well. There are the ones that have mining operations, and then there are those that are called royals or streamers, and they're the investors in the miners. Another factor that you're looking at is whether or not those miners have projects and where those projects are. What is the relative risk of those projects in wherever they exist? If they don't exist in a country that has a good relationship with, say, a larger company that might be based in Canada or the United States, in other words, that relationship is bound by not only their fiscal relationship between them, but also the relationship between the countries. I mean, you want to make sure that a mine has no chance of being nationalized and then swept out from under you, like what happened with Barrick Gold recently. In New Guinea, they had a mine there that was a big producer, and now it's being nationalized. That investment's gone. Now, from Barrick's point of view, it's a big investment, but it represents about 2 to 3% of their total revenue, which is significant. But it could have grown into something bigger, but now it's gone. All the money and the money that they put into their investment is gone in an instant, because that country did not have swap lines with our country. And I've talked about this a little bit in our newsletter, this importance of swap lines. I know that Marin Katusa, very famous investor in gold industry, has talked about it a great deal recently. And of course, swap lines are a big topic of conversation, whether or not we have enough liquidity in the markets right now when we're bailing out all these companies during the coronavirus lockdown. And it's such an important thing. These are, again, more criteria that we put on our trades in our research, whether or not something is a good investment, whether or not it can produce an asymmetric return. So anyways, we have this at least 2 or 3 different companies that we've found these types of criteria where they've all been met, where they have great companies, they're in areas where we have swap lines. In other words, we have relationships with that country, and there's no chance of them being nationalized because of those relationships. They have proven resources that they're pulling out of the ground, and we know that should they realize those or get taken over by one of the majors, they're going to pay a premium for them, and if we're holding their stock, we're going to make a lot of money. So that's the type of things that we're doing at Asymmetric Advisor. That happens to be the research service that I'm talking about here, and that's how we go about making. Now it's more than just gold that we're looking for asymmetric bets. We're looking for asymmetric bets in many different areas. Miners in general, or resource companies, because of the boom and bust cycles that they go through, are particularly good places to look for this. But there are other technologies, particularly in in this environment, in this COVID-19 lockdown, that are starting to emerge, and they're getting bigger. Actually, there are some that were already big, but I think have taken on a new life because of this new environment that we find ourselves in, this lockdown, this not going to work or spending more time at home. Things like remote viewing and remote learning, e-games, all of these things are new opportunities that were there, but now are being magnified dramatically by our current environment. Alex is asking, am I fundamental or technical? Let me just say that there is no such thing as a technical trader. That you cannot trade just on technicals. Technicals alone have no context. Without context, or the fundamental context, or the story, or the hypothesis, there is no trade. So I would say that I look for the hypothesis, the fundamental underpinnings of a story, the thing that actually gives you the edge. And then you can use technicals to model that, and that's certainly fine. But to think that there are technical traders out there that make money because they just do technical analysis is just simply wrong. It's in the same vein as saying that there are day traders, how many day trader billionaires do you know? There are exactly zero. How many day trader swing traders, billionaire swing traders are there? Exactly zero. How many billionaire position traders or trend traders are there? There are hundreds, thousands of them. Do they use fundamentals or do they use technicals? In a lot of cases, they use both, but it's always the fundamental story, the hypothesis, the contextual story that they find, where they find an edge, and then they use their technicals to model it to see that their edge is true or not. That's how they make money. So anyways, again, the whole purpose of this stream right now is to talk about asymmetric opportunities in this COVID environment. And that's where I see there being tremendous opportunity. And I'm going to hold a webinar on Saturday where I'm going to talk about some very specific asymmetric opportunities, and also talk about the portfolio that we've put together that is nothing but filled with these asymmetric opportunities, and the ones that we've already made bets on that have done very well, and some new ones that are emerging in a number of different areas, not only resources, mining, but other areas as well that I had mentioned. The other thing that we'll be talking about is, how do you build a portfolio that does well whether or not you have a booming market or you have a bust market? A recession-proof portfolio. So those are the two concepts, and you do this through asymmetric arbitrage, basically. And so those are the two concepts that we do in the Asymmetric Advisor. We look for individual opportunities that have huge asymmetric potential. Then we also build our bigger portfolio around those asymmetric opportunities, both in boom and bust cycles, so that regardless of which way the market goes, your portfolio is always gaining. And I'm going to be putting a link down below, and although I haven't set it up quite yet. I have the webinar all set up, but I haven't put the link yet. I'm going to put the link down below right after I finish this video, which will be in about a few minutes. Excuse me. But in any event, this asymmetry is so important, and it's the reason why it's so important is that this is really the way the world works. The world doesn't work in incremental gains. The world works in these huge leaps or strides. And we don't know exactly when they're going to happen. But we have an idea of how they set up. And so we can place small bets. And a lot of these small bets may be losers, but one or two of them might really take off, and they more than make up for the say the number of losers that you have. And it's the same thing on the bust side. If a market busts, you don't know when it's going to bust, but you can take out insurance in such a way that you can take advantage of that. We call that a long volatility strategy. And so those are the two things that we'll be talking about in this webinar this weekend. The webinar is designed for members of the Asymmetric Advisor Service. And right now, while this whole pandemic is going, I've been offering a year subscription to the service at a really, really low rate so people can get into it and get involved. Plus, it's a new service, so trying to attract as many people as possible. So, yeah, as a matter of fact, oil is another area that, because it's a resource, is another area where we're finding huge asymmetric opportunities. And that was the subject of 2 weeks ago, our webinar. So, but this week we'll be talking more about the recession-proof portfolio, and I think we'll also talk a little bit about e-gaming. E-gaming is another area where, particularly with what's going on in the market today, that are going to have huge, huge potential. All right, so that's about it. I want to thank you for showing up. Please give this video a thumbs up and subscribe if you haven't already. I'm going to talk about more of these things in a little bit more detail the rest of this week, all around these asymmetric opportunities. And then I'll put the link below for the for registering. Actually, I believe it's already there. If you go to Asymmetric Advisor, the link down below, and sign up, I will then send you a link to register for the webinar, and you will become an Asymmetric subscriber. All right. Thank you very much. See you next video.